This conference will now be recorded.
And therefore, with the session recorded, uh, I have a YouTube channel. It's placed on that YouTube channel, and you can always go back and review. So let me see if I can share my screen. And let's begin to look at the syllabus. And this is the online course, and we typically meet 6 to 7:15. Office hours on Tuesdays and Thursdays, I'm on campus 1 to 2. On Monday and Wednesday, I'll have a virtual time 5 to 6 before this class meets. And a lot of time you should email me so we can look at that. And then I will also be available after the class is over in case there's some questions. Here's the sign-in information. We typically use this text, so this is what you need to purchase the Financial Manager Accounting Primer, which consists of my notes. I always like to indicate I don't get paid, but I want you to have my notes so that you'll be able to have an organized set of notes, and then you look at that information, highlight and etc. But the notes are organized for you. I typically lecture straight from those notes. If there are any problems in getting the text, just get in contact with Ms. Kanisha Patrick Robinson. So we will begin by reviewing basic financial accounting concepts. We will have an introduction to the statement of cash flow, but by the indirect method. We will then begin looking at managerial cost concepts. We'll look at the managerial accounting systems. We'll look at variable costing and cost volume relationships, capital budgeting and the master budget process, and then an introduction to standard costing. This is the process, the syllabus in terms of how we proceed, but I don't lock you into this. I look at where we are and where I think we need to be in terms of, and if we need to slow down, we do that. We need to speed up, we do that, but that's never seldom the case. Today we'll be looking at the review of financial accounting, and we'll have an in-class problem that we will work on. So this is this accounting cycle practice problem, which you should have a copy of. Next week, we have team fraudulent company presentations, and everybody has a review problem that they must work and turn in. We'll talk about that a little bit later. Then we go on to the statement of cash flow. We have an accounting cycle review problem. There's a cash flow paper and some homework, a team study problem, and then around the 6th session, we should have our first examination. Then as we go through and get into managerial accounting, we should, around the 13th session, be near midterm and have our midterm exam. So this is just a guide, it gives you the framework, but as we go through, I'll go through what you need to be working on. But that gets us through midterm. How's the grade calculated? period 100 points, period 200 points, period 300 points, period 400 points, and then there's a special project that we worked on as a team that's 100 points. So our total points are 500. How do we determine the grade for each period? Homework is 20 points. Your quizzes are 20 points. Study problems and special assignments are 20. In-class exam, 40. Attendance quizzes, uh, camera-on quizzes are 10 points. So you have 110 ways to get your 100 points. You have 110 ways to get your 100 points. The project I collected in stages, and we'll talk about that. But you have to make something and then build financial statements around it. You have to make it and then build financial statements, and each person has a statement that they work on. Now the exams are, they'll be virtual. They aren't in class. So everything will be virtual, but I have a tendency a lot of time that I may have 10 different exams. So you got to be able to do your own work. So it'll be virtual, but you're going to need to do your own work and learn to do it. And what you will probably find is that when you try to get some help, the help may lead you astray. Grading scale, you need 450 points for A, that's 90%. You need 400 points for B, that's 80%. 350 points for C, that's 70%. Uh, expect to be in class by 10 minutes, and late attendance is taken 30 minutes after an hour. And when it's an online class, typically I won't do it today, but 10 minutes after the class, I will take a uh, photo of the class to see who have their cameras on. My pause is this: if you got your cameras on, paying attention, and doing your work, then I feel it's my responsibility to make sure you pass the course. If you got your camera off, then you're on your own, because I don't know what you're doing. Your assignments, they got to be turned in by the due date. Late work's not accepted. All your assignments are virtual, so they got to be turned in on Blackboard. Email assignments are not accepted. When there's a team submission, the team member indicates to me who worked on it and what they did. If the team leader doesn't do that, if he doesn't list you as working, then you don't get any credit. When you have presentation, that'll be in PowerPoint. Each member on the team prepares a PowerPoint slide. Each member on the team prepares a PowerPoint slide. It'll be professionally dressed. You speak to the class, not read the PowerPoint. A PowerPoint is not a paragraph, but it's major points. So you don't include on your PowerPoint a bunch of writing. I grade the content, the quality of the presentation. All the participating team members, whenever we're working on something, you got to be here for your credit. If you're not here, then you will not get any credit. And you need a computer with Excel software. Are there any questions?
No.
Okay, no question. Let's see where we are now.
So the PowerPoint is it will be due like at the end of the semester.
A PowerPoint presentation to do. If you check assignments, you'll send assignments this PowerPoint presentation, which I believe is due next Wednesday.
Oh wow. Okay.
Okay.
In person, because you said what I just read said in person.
Say that again.
So is it in person? Because what I just read it said it was in person.
Mm, Uh, when I'm talking to the virtual class, it's always virtual. Okay.
Okay.
So everything is virtual. Unless we decide that we want to meet on campus for a particular reason, this is not working. But if you got your hard copies and if you're paying attention, you can learn just as well. Uh, and I've had virtual classes that have performed better than day classes. So we'll see how you all do. But last semester, in the in the spring of the year, the virtual class was better than the day class. Day class was big, 47 people, and they didn't do the work. The virtual class in the evening, everybody was serious, a little more mature. They did the work, and they performed very well. Uh, say a third of the students made A's or whatever. There may have been only one or two A's in the morning group at the most, and it had twice as many people. So you just got to do your work. Okay, the first assignment you have is the fraudulent company assignments. I think that's due 1 week from the day. You can check Blackboard and see. We're working with teams. Team one has the Ponzi scheme. We'll talk about teams in a few minutes, and the Madoff investment scandal. Uh, and so you gotta, and these are the suggested presentation slides. You gotta get these slides done, and everybody on the team has to have at least one slide. Team two has cryptocurrency. Team three has FTX. Team four has blockchain. So you got to, everybody on the team has to have a slide ready. Everybody presents the slide that they prepare. Any questions? Let me see if I can get to the virtual teams next. Okay, so here are the teams. There are to be 5 people on each team. I put in team leaders. So the first person is the team leader. The second person is the co-lead. So team leaders, what you have to do is to go and select additional people to be on your team to get to 5, or they can contact you to be on the team. But by next class period, team one needs 5 people, team two needs 5 people, team three needs 5 people, team four needs 5 people. Is that clear? I got the team leaders in here because they're A and B students. So every team has some lead people on it. So team leaders and co-lead, you work with the team, help them out, make sure they're on task with what they're doing. Uh, and that first presentation, that's some of the easiest 10 points you're going to have in class, because all you got to do is go and Google the information and do a PowerPoint slide. And that's one of the easiest things you do this semester. Are there any questions on what's expected for teams? Ebony, you see that?
No.
What you don't see? Who said they don't see?
Oh no, I was saying no questions.
Okay. So have these teams ready for me on Monday, all filled out. So y'all get your group me, get these people who are not here. I mean, I could see some people yesterday saying maybe we didn't think we were gonna have class. So I did have class, there are people there. But today, in a virtual class, so people, so that should show you something. If people not here,
I mean, there's no
you may
pressure. There's
want
only
to
there's
on your
only
team.
6 people attending. We only have
Say
six
what?
of our. I said there is no pressure. There's only 6 of us in class right now, and you want us to have a group ready by next Monday.
A good group would be the people who are here. That'd be a good group. I mean,
I guess. Oh, oh.
I, we're just, and we may have to do it part of the class next time, but I don't know why you're here and what is going on. Y'all, how your other classes doing? Y'all got other classes, don't you? Whatever. Okay. So the PowerPoint presentation, very easy. People don't, if you don't have enough, then you just use what you have, and the people who are working will get the points. I can't deal with people who are not showing up. Your next situation would be a review problem. Okay, there, each team has 5 review problems, and everybody on the team works one of the review problems. So there are 5 review problems. Team leader and co-leader assign the review problems. So everybody has one. Review problem 5 and 4 are the hardest ones. So the team lead and co-lead get those, and they assign the others to the other people. Okay. So I think that's due not this Monday, but the following Monday, a review problem. Because, we're going to manage your accounting, it assumes you can do this. And so we're going to go through it, review it, and make sure you can do it uh, rather than just go directly into manager accounting. But it will all fall into place, but I'm not so sure why people are not here in a virtual class. But that's the way it goes. So the people here will get the A's and B's. Let's look at our in-class review problem that we're going to work on today. Okay. And I'll come back to it, but there are 10 journal entries. We're going to prepare journal entries and post to the ledger, prepare a trial balance, income statement, statement retained earnings, prepare a balance sheet, prepare closing entries and post those, and the statement of cash flow. This is what we're going to work on today and what we're going to work uh, on Monday. Get used to Wednesday, Monday. So we're going to do the review. So nothing, you don't have to worry about anything being required on Monday. but on Wednesday
Uh-uh.
we'll
Uh-uh.
begin the
We do it all
PowerPoint.
the time.
Is that doing all
I didn't even take a bite yet, bro.
that?
Like I didn't even get the email.
So unless you're talking, go ahead and make sure you're muted. Okay, so let's see if we can look at our accounting theoretical framework. And in Principles 1, what you should have learned how to do was prepare an income statement, a statement of retained earnings, a balance sheet, and a statement of cash flow. That's what you should have learned how to prepare in Principles 1. We prepare these statements in Principles 2, but we have managerial journal entries to go on top of the regular journal entries. Okay. Everybody uses uses financial statements. If you're going to work for somebody, you need to look at their financial statements. Let's turn back and look at see what a financial statement looks like. These are some definitions, and you're supposed to have copies of this on a primer. Here's an income statement: revenues less expenses. You should have learned how to prepare the sales, less cost of goods sold, gross profit, less operating expenses, net income before taxes, net income after taxes. So just that four. But you should have learned how to prepare that. You should have learned how to prepare a statement of retained earnings. Beginning retained earnings plus the net income less dividends equals ending retained earnings. You should have learned how to prepare that. And then the balance sheet. You should have learned how to prepare a balance sheet. The income statement tells us how much income we made. The balance sheet tells us what assets and liabilities that we have as a result of that income, when we were making them. When you prepare a balance sheet, the assets have to equal the liabilities and stockholders' equity. Total assets equal liabilities and stockholders' equity. So in general, in summary, that's what you should have learned in Principles 1. And of course, we're reviewing it. Are there any questions?
Will you be reviewing this? Like a light review? You know, it's been a long Christmas break.
It has. Okay. That's what we're doing now. Okay. So here's, counting cycle. And once again, you should have, hard copies of this so you can look at this and follow along easier. We talk about the fact, first of all, that you need to move to the standpoint that you're the business, you own the business. You're not buying something, you own the business. If you were to start your company, you would have a corporate name, you'd have articles of incorporation with the state, organizational chart, you get your employee ID, you'd maintain a corporate minutes, and you'd issue shares of stocks. This is what you would do if you were forming a corporation to get ready. You would contribute money to the corporation to get it going. You get a stock certificate back. You put your money into the corporation, you get a stock certificate, and your money now belongs to the corporation. And then you would create a system so that you could get these financial statements prepared to understand what your company was doing. So that's what we have to do. So how do we get that done? First of all, everything in accounting is based on this equation. Assets equal liabilities plus stockholders' equity. Stockholders' equity equals common stock plus retained earnings. Retained earnings equal revenues minus expenses minus dividends. Everything in accounting is based on this equation. The objective of a business is you start a business with cash and you want to increase the cash through earnings. You can increase it through liabilities too, but in general, the goal is, okay, I put this much money in the company. How much cash do I have now through my earnings? So this is that equation. Assets equal liabilities plus common stock plus retained earnings. And of course, everyone should be familiar with journal entries. We have a double entry system developed in the 1400s by Pacioli. And he said that, when there's a business transaction between two parties, what you receive is the debit, what you give up is the credit. The debit is on the left of the account, the credit is on the right. So let's look at a simple example of this. Suppose we were buying an Otto for $10,000. Some equipment with Otto. If we paid cash for the Otto, we debit Otto and credit cash. We got an Otto, that's what we received the value. We gave up cash. If we borrowed to buy the Otto, we debit Otto and we credit notes payable. We got the Otto, we gave up a note. And finally, if we gave a combination of cash and a note, we paid cash down, had a note, we debit Otto, we credit cash, and we credit note payable. So notice how a journal entry looks, which is the beginning point in accounting and what we do on all transactions. We have a debit for what we got. We have a credit for what we gave up. The debits are always first, the credits are below them, and we indent the credits. So that's what a journal entry looks like. To get to these financial statements in step 7 here, we have about 9 steps in the cycle. The key one is going from steps 1 to 8. Step 1, we analyze transactions and make journal entries. That's step 2. Step 3, we post to the ledger and prepare a trial balance. We make adjusting entries and adjust the trial balance. Then we prepare the financial statements and close the accounts. And a post-closing trial balance is when we work with that to make sure we balance at the end. Okay? Any questions? So these are the steps, and with these steps, we'll get those financial statements done. And we don't try to do them all at once, do we, Miss Ebony? Do we try to do them all at once?
Absolutely not. I mean, I don't think that's possible.
So today, we're just going to work on steps 1 and 2, analyzing transactions, making journal entries. If you can analyze a transaction, make a journal entry, then these other steps will follow in. If you can't analyze a transaction, make a journal entry, then it's tough to learn accounting. And so we're going to focus on steps 1 and 2 today, analyzing transaction, making a journal entry. Let's look at how we make journal entries. And we learned last semester, let's just lay out the major journal entries. When cash comes in, there's 6 journal entries. And with these journal entries, we debit cash and we credit something. So anytime cash comes into business, you got to debit it. And if you get common stock, you credit common stock. If you get revenue, you credit revenue, and so on. So every time cash comes into a business, you got to debit cash and credit something. When you pay cash out, you got to credit cash and debit something. If you purchased an asset, you debit the asset purchase. Now, asset purchase is not an account. It's supplies, it's inventory or something. Liability paid is not an account. You have to say what account it is, expense paid, what it is, but you credit in cash, dividends, and then sales return, refunds, sales return and allowances. Now, when you make journal entries, either cash came in, it's got to be a 1 through 6. So when you analyzing the transaction, you're seeing if it's a 1 through 6, or if you pay something out, you're looking at it to see if it's a 7 through 11. If cash is not involved in the transaction, then we have some more asset transactions other than cash. And it's telling you what you debit and what you credit. Liability transactions other than cash. So we have 21 some transactions. I think, we just laid them out in Principles 1 for those who didn't teach, so that, in analyzing transaction, you analyze a transaction to see if it's 1 through 21. And then this tells you what I'm going to debit and what I'm going to credit. The next thing you have is a chart of accounts. So when you get ready to make the journal entry and put the accounts in, you got to come up with something off of this page that has a number by it. And asset purchase don't have a number. You got to say what asset it is. On the left side are the balance sheet accounts. Assets, liabilities, all the way through retained earnings. Now, dividends and income summary are just temporary accounts, but they're not balance sheet accounts. They don't go on the balance sheet. So when we prepare a balance sheet, it's retained earnings up. Then on the right side are the expenses, the revenues less the expenses. And whenever you make a journal entry, you're going to put down the name and the number. So you get used to the fact that I got to find, when I make a journal entry, I got to find something off of this chart of account that has a number by it. Are there any questions? Did we summarize it pretty good, Ms. Ebony? Okay. So what we want to do next is to go back and look at that review problem. And what we now want to do is to work this review problem out. And all we're going to do is make journal entries. That's all we're doing today, making these 10 journal entries so we can get started. And you're supposed to have pulled up what? You're supposed to have your Excel spreadsheet pulled up. An Excel spreadsheet is just what we use in accounting, and it adds and subtracts for us. And so the first sheet is journal entries. Okay, we put them here. The second sheet, the T accounts, they come here. The third sheet, the trial balance, and we put the closing entries here. And we also do our income statement, state retained earnings, and balance sheet. So we'll move across all of these, by the end of class next time. But today we just don't journal entries. All we're doing is making journal entries. So can everybody make this first journal entry? Can everybody make the first journal entry? It said he invested 10,000 in the business. So what's our journal entry type? I don't hear anybody.
Investments.
Ah, no.
Investments.
Okay.
That's it.
Whenever we start a company, let's come in here. This is always the first entry we make. We have to issue common stock. And we debit cash and credit common stock. So the transaction type is 1. In a 1, you debit cash and credit common stock. So this is always first journal entry. Okay? So let's make this journal entry. Our type is going to be 1. We're going to debit cash, so you should be working with me. And we're going to credit common stock. And our account, you need an account for cash. That's 100. You need an account for common stock. I think that's 400. We're going to debit cash for 10,000. And we're going to credit common stock for 10,000. Are there any questions? Oh.
Why is the account number 400 again?
So what now? Why is the account number
Why is
4?
the yes, 400?
Okay, Miss Robinson, one of my team leaders. Okay. Here's our chart of account with these account numbers. Cash is 100. Common stock is 400. So you see that?
Okay, yes, I do.
Okay. So that's that first journal entry. Does everybody have a first journal entry made? Somewhere. You should have this Excel spreadsheet pulled up. But if not, you should have it somewhere. Okay, let's go to our next journal entry. So all we're doing is making these journal entries. Once we get those made, we're going to eventually move to the financial statements. Cash received for car rental revenue, 50,000. What's my journal entry type here? cash received for revenue, sales. So that's the type 2. What I debit cash, and I could credit any of these, I just credit sales. Okay. So when we get ready to make this second journal entry, it's type 2. Debiting cash again. This time we're crediting sales. The amount was $50,000. The account number for cash is, of course, 100. What's the account number for our sales? What is the account number for sales? Do I have any A students in here today? Are y'all shy today? Huh? Sales, 500. So let's look at what we do. We read the transaction. Cash is coming in. So we know that if cash is coming in, it's got to be a 1 through 6. We have to determine which one. Once we determine which one, then this chart tells us what the debit and what the credit. And then we simply come to the chart of accounts to make sure we got the right name and the right amount. The third one, we collect cash on account from corporate customers. What's our type?
3.
That's a type 3. What are we going to debit?
Cash.
What are we going to credit?
Accounts receivable.
Okay. So we're going to debit cash and credit account receivable. Our account number for cash is what? 100. We credit the account receivable. What's our account number for account receivable? That 110. And the amount was 20,000. Any questions? No question? All right, you all go on and do number 4. And I'll call on somebody to give me number 4 in a few minutes. I'll call on one of these team leaders to give me number 4 in a few minutes. So go and make number 4.
I have a question
Yes.
for the document for the number of the accounts. I've been trying to look for it. Which one is it under? Because I pressed accounting theoretical framework and I didn't see it in that one or the other one.
Oh, Miss Robertson. The accounting cycle review. Okay, see that? You should have this document. with this picture on it.
Okay, okay, I got it. Thank you.
You're welcome. Unfortunately, yeah, you got the page numbers. So that's page 11. Okay, so I want you all to make this next journal entry. And typically I give you 2 minutes per journal entry. So do we have this next journal entry made? Do we have next journal entry made? Y'all get a little break
No, I
today.
kind of need guidance on this.
You need guidance. Well, what happened? So tell me what happened. You got a working capital loan, right? With 25,000. Have you ever gotten a student loan?
Yes.
What happened to your checking account when you get a student loan? It goes up or down, or you get a refund check.
Down. Oh,
Oh,
wait, up, up.
okay. So that being the case, we know that we got to be somewhere in 1 through 6. And it looks like they borrowed money. They got a working capital loan. So it looks like that's a type 5 where we're going to debit cash and credit notes payable. Okay?
Yes.
And that's going to be a short-term note. So we look at our accounts. Debit cash 100. And let's just use 307. We're assuming that's a short-term note, 307. So this was a type 3 here. And so we said that this was a type 5. We borrowed money. So when you borrow money, once again, cash is coming in. We're going to debit cash and we're going to credit short-term note payable. Cash will be in 100 and we'll just use 307 for the short-term note. And we borrowed what? 25,000. And so, I think you see why I'm concentrating on the journal entries. You really can't go any further until you get the journal entries down. Now let's go to journal entry 5, where we purchase supplies using cash. So now we know that what? We're paying out cash. We're giving up cash. So this is going to be a type 7, but the asset purchase, we're looking at, we purchase supplies, and so we need to go and get the account number for supplies, which is 130. Okay, so our type is 7. Different from the other, we're going to debit supplies, and we're going to credit cash because cash went out. The account number for supplies is 130. And the account number for cash is 100. Now it's $1,000. Are there any questions on this? Are there any questions on this journal entry?
No.
Good. The next, I want you to do the next set of them. Six, 7, and 8 are all payments of cash. So I want you to make these 3 journal entries. You're paying out cash, so you've got to be somewhere 7 through 11. So go and make these journal entries where you're paying out cash. Remember, you have 2 minutes per journal entry at the most. So you should have these done for me in about 6 minutes.
I can't see the journal entries we're supposed to do. Yeah, thank you.
You're welcome. All right, what happened to number 6?
You debit accounts payable and credit cash.
Okay, we're going to debit accounts payable. What's my journal entry type?
Eight.
That will be an 8.
And then account payable, the number is 301 and cash is 100.
And what's my amount?
5,000.
Are there any questions? Let's go on to the next one. Paid rent. What's my type?
Type 9.
The
9.
type 9. We're going to debit what? Rent expense. We're going to credit cash. What's the account for rent expense?
651.
And of course, cash is what? 100. The amount of the rent was 3,000. 8. What's our type there?
Type 10.
It's a type 10. What account we going to debit?
Dividends.
What are we going to credit?
Cash.
What's the account for dividends?
455.
And for cash, of course, what? 100. Amount was 2,000. Okay, we got 2 more transactions, but cash is not involved. So you can't use 1 through 11. You got to use something else. So the first one, we purchase supplies on account. What type do we think that is?
Well,
That's a 12. Purchasing an asset utilizing debt. That's a 12. And so we're going to debit the asset purchase and credit the liability created. That's type 12. We're going to debit accounts payable. Excuse me. We're going to debit supplies. We're going to credit accounts payable. And what's the account number for supplies? 130.
130.
What's the account number for accounts payable? 301.
301.
And our amount was how much? 8,000. Okay.
8,000.
8,000. What about our found one? There. Car rental revenue earned from corporate customers with the sale on account. So we did the work, but we didn't get any cash. So we cannot be up there with cash. We have to find another account or another type. Look like that might be a 15, a sale on account. What do we debit? Account receivable. What do we credit? Sales. So that's type 15. We're going to debit account receivable, credit sales, and our amount was 30,000. Account receivable is 110, and sales is what? 100. So we've made all of these journal entries, got them all done. How much cash do we have? After all these journal entries, how much cash do we have? That's the purpose of the T accounts, to tell us how much is in each account. So we're going to put these amounts in the T accounts. If it's a debit in the journal entry, it's going to be a debit in the T account. If it's a credit in the journal entry, it's going to be a credit in the T account. So we're going to post, so that's posting to the ledger. So we go to the T accounts, we're going to go to cash. And we're going to put 10,000 in here. Then we're going to drop in this little box here, 1, which lets us know that was journal entry 1. Then with common stock, we're going to do a similar thing. We're going to credit common stock for 10,000, and we're going to put a 1 here. This helps us keep track of items if we have issues balancing out. So if you got these little notations in there, we know where they are. Any question on what we just did? We're trying to find out how much cash we got and how much is in all the other accounts. I'll do one more for you. We had cash sales of 50,000. So we're going to come to the T accounts. We're going to put 50,000 in here. And that's going to be transaction 2. We're going to go down to sales and we're going to put 50,000. And that's going to be transaction 2. So your job next time is get everything posted to the ledger. Then get your balances, what your debits, what's your credit, and you're going to put your amount on the side of the ledger. Then you're going to come in here and do a trial balance for me. Now, with a trial balance, we kind of keep it separated. We got our permanent accounts up top and our temporary accounts starting with dividends at the bottom. You keep these accounts in the order that they are on this chart of accounts. So when you go to that trial balance, your accounts stay in the same order. cash, liabilities, stockholders' equity. Then it comes to the revenues and expenses. So it's already set up for you. You just got to keep in that order. Sales, then all your expenses down here. Is that clear?
Yes.
So how many people are going to have a trial balance ready for me next time?
I'll try.
Try. Let's do more than try. Okay. Next time, then, we will try to finish this problem. You all can get it to the trial balance. Then we'll finish it. And we will do the teams next time. So probably at the end of class, we'll do the teams then.